to really markets hanging on to everything that OPEC Plus has to say right now. What were the indications coming from the minister?
Well, again, the comments made an already volatile market even more so. What the Saudi Arabian energy minister is saying is that extreme volatility and the lack of liquidity right now in the markets is causing the futures markets to move in ways that are disconnected from the supply-demand fundamentals. In other words, the Saudi oil minister sees the futures market increasingly disconnected from fundamentals and says, as Sherry mentioned, that OPEC Plus may be forced to cut production. Now, you're looking at the West Texas Intermediate, the U.S. benchmark. That is Brent crude, which is the benchmark really for the rest of the world. And these oil futures have fallen more than 20% since early June. As for volatility, West Texas Intermediate had a price swing of about $13 in August alone. As Sherry's mentioned, it's clung close to 90. We've seen it come back just a little bit in Asia trading. Brent futures, on the other hand, paired losses after the Saudi comment to trade near 96 after earlier sinking all the way down to 92. And the real story here is that the first 5 months of the year we saw oil prices surge. The rally has really gone into reverse for a number of reasons, exacerbated by the drop in trading volume, but concerns about inflation, rate hikes, dropping demand, all of this depressing price. And now the oil minister's remarks just weighing on that, as you know, and that has exacerbated the moves even further. Heidi?
More panic in European gas and power pricing.
Yeah, now we're seeing nat gas futures moving in the opposite direction. They're taking off in a very big way. And again, it's on concern that supply could be cut coming from Russia. And we're seeing European countries very dependent on Russia. You're looking at the Dutch natural gas futures, European futures in general in natural gas surged about 20%. The key Nord Stream pipeline from Russia to Germany is going to stop for 3 days of maintenance on the last day of August. So that's the real concern there. You look at natural gas real quick when you get a chance, and you'll see U.S. natural gas also took off in a big way, hitting fresh 14-year highs. Natural gas in the U.S. is up 150% year to date, and that's because of a drop in supply and booming demand. And right now, this latest surge, it is taking off on that European price move. If we drop back into the Bloomberg Russia's gas grip, which explains the surge you're seeing in those Europe prices, much of Europe, particularly Germany, remains dependent on Russia for its nat gas supply. And so any cutback at this point escalates the energy crisis.